Go ahead. Who's up first? Me?
You go first. Yep, you
Sure.
have the honor. You got the
I
floor.
I would be graciously appreciative of the opportunity to go first, my queen, and give you some analysis here. We're going to go into the materials sector, specifically chemicals, and we're going to pick up a play. I see this thing in a couple of different interesting ways, and give me a TROX, Matt, if you can. TROX. I was hanging out with some of my trading coaches there at Tackle Trading this morning. We're having a conversation about the markets, what we're looking at, and all that kind of stuff. This stock came up, grabbed my attention. I started mapping it out. I like this for a couple of different reasons, and I'm glad that you did start with the weekly chart here, Matt. We've got a support level that is forming here over the course of the last 7, 8, 9 months. We had a beautiful trend throughout the entirety of the first half of the year. We gave that back. It's now had a deeper retracement for a couple of months on the weekly chart, and we're trying to find support around this 16, 17 zone, which also corresponds with the rising 50 period moving average, which is a nice longer term level for investors. And on the daily, it's right next to the 200 period moving average. And if we can come back down to the daily chart for just 1 second there as well, a couple things that you're going to see on this daily chart that I like. And as we map this out, I'm also going to talk a little bit about valuation, their fundamentals, and the sector here in just a minute. It was in a downtrend. Pivot analysis, you can see it in the moving averages. Keep it simple. They rolled over. We failed on the high base breakout back there in May. It went into a downtrend. And this is what can happen when you need to take some time to develop new opportunities, right? Lower low, lower high, lower low, lower high, but then equal low right at the 200. You'll notice it from July through the earnings report. We've really stabilized around the 17 mark, right on that green line. It now has moved into a compression pattern for me. And there's several things I like about this one technically in the short term. Go down to an intraday chart on the hourly. And I wrote down a couple of different ways you could trigger on this one, Emily, if you're looking for upward price appreciation to get you into some kind of swing trade. Right above that 19 mark. This is a swing trade. Yes, this is a swing trade. Right above that 19 mark, I think that is the trigger I would take. Okay, it's an aggressive trigger. There is some noise back at 1950 that you could decide that, okay, I need to get through that. I personally don't think so. Those are wicks back around the earnings report. You'll notice the time and the period that it was in at that time. It was right on that earnings report cycle. I'm more focused on this 19 level, which is developed over the last 4 different bars on the daily. You can see it right on the intraday as well. That's number one. Number two, I really like stop loss placement. Now, for me personally, I think this can be one of those swing into position trades if you want to trail stop and have that work that way. Mentally, that's the way I would personally play it. Use a stop loss. Let the pattern develop on a trigger, let it start working up towards T1 and keep my stop loss placement in place. I like a stop below this entire zone if you're longer term thinking, around $17, so below that. But really, if you're going to go swing trade, I think you can come in here intraday and go underneath 18 bucks. You're playing this as an intraday breakout with confirmation. You then come into the intraday level to keep your risk around $1. Okay, you'll see the pivot point from yesterday, also last Thursday, right at that $18 level. Back to the daily chart for just 1 second, if we can. T1, T2, I think you've got several choices in here. Around the 50 period moving average, which is just above 20 bucks, is going to put you around a 1-to-1, depending on exactly how you map out stop and trigger. So that's tight. But what I really love playing this as is actually trend developer, where at T1, you could do something. You could convert it into a cover call. You could convert it into a spread, or even simpler, if you just stay in equity, you could just trail stop up. Okay. Trail stop up, approach it that way. Because if we can get through the 50, you got clear sailing all the way up to 22, which is where that next noise is, 22 and a half. I like this setup where it is. I like the technical compression where it is. And it's one of these stocks in materials that is down right at this location where it's primed to go. Couple things on fundamentals, which if you do truly approach it as swing trade, aren't going to make an impact. I get that. I just want to make a note. P ratio of 2.6. Forward P ratio at 7, very low valuation. It's not swing trade analysis. I know the executioner's already shaking his head at me.
You're already dead.
All right, then if that's the case, I do still want to firmly submit. TROX is a nice build out trade.
Analysis on a swing trade to try to make it look better.
My queen, this is my pick.
Thank you very much, Tim. I will give you my I'll give you my thoughts at once Mark goes
That
on
looks like
TROX.
a home run hitter at the plate.
Is he gonna
So
tap his
I
feet?
hit me on Babe Ruth in 1917. I already called my
like he
shot.
has that look, like, you know, look zoned in at the ball, ready to take the swing.
I know the pitch that's coming. It's a heater down the middle. Like he's going to give me a fat pitch. I'm going to hit it.
Yeah, that's right. Jonathan has a very good point. You know, there's a lesson from Matt. If you can't be or beat the queen, then work for her. And I actually, that's not a
one,
bad
Jonathan.
call.
What do you think's happening here?
That's funny. All right, so TROX, and by the way, I do like chemicals in general right now. Obviously, there's some good chart setups in that space, and it's been hot. And I like where materials are in terms of having that discretionary type area, the cyclical area of the market. If we can get a doji in materials on that chart, could help us. Some of these charts and TROX actually outperforming the material space here today. Emily, that's my pick. And that's my analysis. Yeah.
Thank you, Tim. Appreciate it very much. Mark.
High conviction, long-term investment ideas, what I'm bringing you, my queen. And I like it when technicals, I like it when fundamentals on a reversal story line up. I think I have one here in Gilead Sciences, GILD. Let's talk big picture first. You know, I want exposure to defensive areas of the market. Is criminally under positioned in healthcare and defensive areas over the last month. You know, and a lot of the picks I've brought you over the last month have been very defensive in nature, recognizing the price action, whether consumer staples or somewhere in the area. Healthcare is an area that stands out big time to me. Late last week, this week, you know, the chart's been there. I think there's plenty of evidence that if not rotation to defensive areas of the market, strong movement into that area, stabilization, if nothing else, which on days like today, you don't mind. So top-down analysis that guides me where I want to go. Where I'm light on portfolio guides me, and I don't know your healthcare holdings right now, so it makes me look in the healthcare. And I spent a lot of time last night on Gilead Sciences. Now, Gilead's a company that I have followed over the years because it has a tendency to have these long-range consolidation patterns, creating cash flow opportunities, bouncing back and forth between support and resistance. Now, last year, you know, Gilead Science, you probably recognize remdesivir, right? In the headlines, COVID is in the headlines in 2020. Remdesivir is the miracle drug. Remdesivir slides down out of favor, creating a lot of volatility. And as we know, selling can get selling. Gilead fell out of favor. I mean, remdesivir, you know, the thing about these big pharmaceutical companies is, you know, when you break down, and this is something I did last night, there are numerous products. They're so insulated, and this applies to Pfizer or Merck. They have their top sellers, and Biktarvy is Gilead Science showing growth within that, but they have so many product lines. They have so many different drugs. They have so many different things along the way. In fact, Gilead Sciences has, you know, 16 new candidates in the pipeline that are in phase 3 or have already been submitted to approval. So they have a robust pipeline. They have a robust product line. And I really think remdesivir created some interesting price action in 2020. All right, let's get down to a couple really good things I like about Gilead Science, besides robust pipeline, diversification, healthcare, all of that good stuff. Let's talk dividend first of all. Healthy 4% dividend here. Healthy 4% dividend, a dividend that they have been increasing since 2015 every year. 4% dividend is kind of nice little sweet spot, right? It's not this ridiculous dividend where you're like, makes you like, 10%. Like, you know, it's like, I don't trust that. Something's got to be wrong with that, you know. And it's not like one of these 1% that doesn't get, you know, that 3 to 4% on a dividend yield really starts to get my attention. And then when you look at the ability to sustain that dividend over time, I started diving into the fundamental metrics. Gilead has an outstanding price to free cash flow ratio relative to itself. This is a company that makes money. When you look at the earnings reports and just go back, this company makes money, this company makes money, this company makes money, this company makes money. And through buybacks, dividend, starting funneling some of that free cash flow back to the investors, creating that cash flow that we don't have to work on ourselves. So I got top down, I got fundamental metrics that point to valuation on this company. I got cash flow built in on the dividends, right? So this checks a lot of boxes. Well, a lot of companies will sometimes. What gets me to bring Gilead today, as opposed to 3 weeks from now or 7 weeks now, is that you're breaking out of that 200 weekly, all right? So the technicals, which play such a huge role for me in the timing of trade management or entry decisions. Classic pattern on a reversal. You hit a bottom, you find support, you start to climb up, you go up, come back down, and then start that slow climb. You came up to the 200 weekly. Found resistance, found resistance, found resistance, all the while giving time for those weekly moving averages to work up, creating a pinch situation in the last few weeks. Pinch broke to the upside. After numerous tests of the 200 weekly, you break out. Got some room to run here. I like the valuation, like the cash flow, like the diversification of the company's price line, love the technical entries, forcing me to action. And so when I'm looking to get into defensive areas of the market where the market might be showing favor, well, then I start doing research investigation. Where do I want to go? For me, I want to get into Gilead, not as a sell naked put. Let's go to the daily chart now, if you would. Not as a sell naked put. Let me get some conservative. I want to own these shares. The only question now is the specificity of the timing. And this can be tricky because this is where swing trading brain says, I missed the entry, right? I get that, right? Like this would have been same analysis 2 days ago, same analysis 3 days ago, same opportunity, same technical, same valuation, dividend yield would actually been a smidge higher. So now it's the specificity of the entry. A lot of ways you can go here, right? You know, like if I'm a swing trader, which I'm not on this.
Not.
This is a.
Like you're looking at investing though, right?
Yeah, 100%
Then
investing.
we don't even need to discuss the timing of this. You broke out last week. You continued this week. You pick up the shares.
Yeah. So
this isn't swing trade analysis.
But I wanted to be, because all of us at Tackle Trading, even if we're not active swinger traders like mine, we have a swing trading part of our brain, right? And you look, that might be a little overextended. I love the room it has to run. I love everything about this opportunity in an area of the market where I'm extremely light. Healthcare, like this for directional. You want to do a little cash flow. I would actually advocate very low delta on this one. I think this is a long-term investment that carries with cash flow with it. And if you want to do a little cash flow up above low delta, you can apply whatever system you want here. I think this is a stock I feel very, very comfortable with. I present you Gilead Sciences.
Thank you, Mark. Oh man. Here's the thing, right? Like old me would have jumped at TROX and just gone directional and just bought calls and whatever and just directionally trade that. Love that. However, that idea of just rather than buying calls and just going crazy the way I used to, and getting into this because of just where the price level is, getting into it using the equity and just buying the shares, eventually turning it into a long-term investment if I so choose, really love the idea. Not an area of the market that I'm in. Basic materials don't have a lot of exposure there. I like that it's an inexpensive stock that I can do a few things with. Obviously, we do have to clear the 20 price range and actually break out of 19 there, but I like it. Gilead, on the other hand, with healthcare, if you look at XLB and healthcare, those two ETFs, healthcare looks so pretty. Give me XLB.
This is XLB.
No, give me basic materials.
Oh, XLB.
B for boy. Breakout, retracement. Breakout, retracement. Where do you go? I like Gilead, but I'm not chopping Tim's head off for bringing TROX. I'm not.
The executioner has things to say. Am I ready?
Go ahead. I'm not. I know you are itching. You are itching and dying to say something. Go ahead, because Queen is not saying anything today.
Okay, TROX. TROX has some very interesting longer term analysis to it.
Mhm.
You know, you're testing the 200-day moving average. It's got the argument for TROX is a longer term argument. It is not a swing trade in any capacity. Is it a swing trade? It's reversal analysis, it's fundamental analysis, it's longer term, it's cash flow analysis, but it is not swing trading analysis. If you're looking at a swing trade in the specialty chemical space, let me just give you a list since we discussed these in detail on Friday. Lynn Holdings is the best swing trade of the bunch.
Mhm.
That is a breakout that showing a little bit of weakness towards the top of the chart, but we're talking about a breakout with momentum. You got retracements galore that just need doji analysis. IFF, LYB, better. In fact, the 200-day moving average swing low bounce off LYB is far better than CROX from a slowing momentum perspective. When you're looking at ALB, just needs doji analysis. You got momentum in trend. You're talking about a pivot point on the 20-day moving average, needs a doji. When you're looking at AVTR, these are all specialty chemical companies. AVTR, you're looking at a breakout recently against a high base with momentum on the 9. When you're looking at AVNT, you're looking at a potential reversal with the breakout of 50, all better from a technical perspective, from a swing trading perspective. When you're looking at TROX, you're looking at a slowing momentum against a 200-day moving average bounce, and you cannot target above 20. It just cannot occur because of the downward moving 50 period moving average, as well as the old chop left of here, plus the significant whole number. TROX isn't a swing trade, and so he needs to get his head chopped off because it's not a swing trade. I don't know why you shifted. I don't. Like the whole morning you were looking at the fundamentals and all of a sudden you went swing trade.
Went to the short-term analysis, one-to-one.
What's the old analogy of oil and water? They don't mix.
That's right.
Well, Tim dumped some gasoline into the bowl and then lit it on fire. Like, no, it's not a swing trade. His head is absolutely chopped off. Absolutely.
Oh, goodness gracious. Well, Tim, your brother chopped your head off, but this is why I was not going to chop your head off no matter what you presented today. 6 years ago, I walked into your office with my dear friend Rosemary to do our mentorship on what we do now, right? And I was a completely different person there in terms of my style of trading, and I have evolved thanks to that, very, very serious conversation we had to have in your office because of how I was trading. And so for that today, I cannot chop your head off because I have seriously, literally changed, who I was in the beginning because of just how aggressive I was because of what I needed to, to get out of at that time versus now, I don't have that same pressure to, I guess, create that income that I needed back then. But still, if I had kept going that route, I would not be here trading today, 6 years in. So for that, I am not chopping your head off, and I'm very grateful that I came into your office that day. Matt really should be the one getting his head chopped off today because he was not available to mentor me during that time. So
as the sword, and your nostalgic personal moment doesn't change the fact that TROX isn't a swing trade.
I do appreciate the gratitude and the memory, kiddo. When you brought that up this morning, brought a big smile to my face, no question about it. But Matt's right. If this doesn't deserve getting passed, I don't care about the memory. I should be.
When you said swing, I was like, "What are you like? Give me
If I deserve to get chopped, I deserve to get chopped. Definitely, don't worry about that. But I do appreciate you reminding me of that memory. That was such a wonderful 3 days.
The step system cried a tear today.